And hi, everybody. Welcome to another edition of Your Money Radio. Danny Stewart, Don Vandenborg. We are live with you wherever you are, whenever you are. And look, you're noticing something different here, stock nerds and market lovers today. One, it's the second day of a sell-off, so that might be new to you. Two, Danny, where are you at?
I'm actually at the office, Tim.
Are you able
at the office?
to turn the computer and show people your office, or is it going to unplug a bunch of cables?
We don't do that.
Don't do that. Danny is the most technically challenged
We may never get them
individual.
back.
No, I just tightened up. How's that? There it is.
Okay. Oh, we can't see the stock certificates that's on the other
Oh,
wall.
no, that's on this same wall back here.
Yeah, so Danny is.
I'll do that next time. Next time I'll have my computer plugged up and I'll be able to walk around.
There you go. Yeah, we'll give him the virtual tour of the office for those that are brave enough to go into a office where there may or may not be. Our office doesn't have corona. It's all the other offices in the complex that I'm worried about. Anyway, stock nerds and market lovers. So we have a lot to talk about. We're going to, Danny, in an effort to give them a roadmap of where we're going. If you can read my chicken scratch, that's where we're going. No, we're going to talk where markets might be headed here. We're going to cover all the sells that we made yesterday and today. At least I'm going to. I know Don will do that for you too. We'll talk. We might mention the jobs report. I want to show you a relationship between the dollar and markets that this is what's happening. We'll cover the screens, sector rotation, a whole bunch of other stuff. But Don, I wanted to tell you that I have gotten into cryptocurrency.
I have a feeling that you being into cryptocurrency is mildly different from the average person that's into cryptocurrency.
You know, it's like you can read my mind. We were waiting about 40 minutes for Danny to start the show, and I was dying to tell Don I got into cryptocurrency, and I'm like trying to not use, like, I don't like the small talk. The best, I think if I had my druthers, we would incorporate the morning phone calls into the show so you can hear what's going on. Like we're just talking at market talk, some nonsense.
And I definitely
for you,
it
means you got a Bitcoin mug or something like that.
Brother, you're close though. So this is 2018 Allen and Ginter sports cards, right, from Topps. And so I had bought these boxes. Like I was just in Target. I found the person who was stocking the shelves, and I said, "Oh wow, what are these?" He goes, "Oh, they're 2018 Allen and Ginter." I'm like, "I'll take them all." And I didn't even know. You just can't find sports cards on the shelves these days. And so I've had this for like 2 or 3 months. I've got 3 boxes, maybe 2 boxes of these. And then I'm like, gosh, I wonder what these sell for. I just got curious a couple weeks ago. It turns out Don, I'm going to show this on the screen. It's stupid ridiculous. They made sports cards, Don, of this is, I mean, clearly there's no coin in here. There's no cryptocurrency isn't physical, but Allen and Ginter mini cryptocurrency coins, someone sent it in to get it graded, and on September 2nd, someone bought it for $41.65. So now I am in the cryptocurrency.
So
my only collectible remains.
Speculative. The cards on cryptocurrency are speculative. The whole
crazy,
thing.
Right? Like I love the sports card market. I am I love sports cards. I love, a lot of people, Danny, I don't know if you guys can see it. Danny has some artwork in the back of his office that, Don, if you would hear the ghost of Dan Kofal, who's Danny's former partner, rail against all of the artwork in Danny's office. Like, I mean, just rail. Like Jesus himself hated Danny's artwork. And Kofal would just walk into the office. Kofal was, everyone told me how nice Kofal was. And Danny's like, he'd give you the shirt off his back. But Kofal walked around in a state of agitation most days. Is that correct? like I don't know who pissed on his shoe, but every day somebody proverbially pissed on Dan Kofal's shoes.
They can hear me. They're listening to me. I know they can hear me.
Yeah. Right?
He's just a pessimist. He was always a pessimist.
Dan hated me.
You see that car parked out there? Have you ever seen that car out there before?
They got microphones. Oh my gosh. Did I ever tell you the joke? Well, anyway, Kofal would rail against Danny's artwork, but I don't mind Danny's artwork. the joke I wanted to pull on Kofal, and Danny wouldn't let me do it because he thought Kofal would, one, believe me, and two, hate me even more than what he disliked me. And I don't hate many people, but I don't share a similar outlook as Kofal did.
Shocking.
So I said, Danny, what we need to do is tell Kofal that in a toilet, we have both we have a big, large female and male audience that listens to the show. So on urinals, if you're not familiar, there's a little sensor, and it looks like a dark little tiny solar panel. You know, it's like maroonish or black, and it senses when you move out of the view of the urinal, and it flushes automatically because, as we all know, guys are pigs and they don't flush the urinal. Okay. And so I said to Danny that what we need to tell Kofal is that those are actually cameras, and the government's been watching us since 2003.
He would have come
Why
back
not?
and said, no, it's 1998, Tim. You got the date wrong.
Yeah, and
Well, but
Danny's
what
like,
you don't know is that every time Kofal walked up to one of the urinals, he had his little sticky.
Yeah,
And he
covered
put it
He
over
covered it.
top of it.
oh my gosh, and the thing is, like, I think the Kofalian mindset pervades everyday life. Like, there's somebody out there that this April we could say that the government is taping every time you step in front of a urinal to determine if you're a terrorist or not. And
Or a terrorizer, as George Bush would say.
yeah, terrorizer. I love the Bushisms. Terrorizer. Strategery. And so, well, Kofal's strategery, since he's not a terrorizer, was to take his Post-it note and put it over the. Anyway, Danny actually said we're not doing that because he will hate me even more. But that was the best April Fool's joke I ever would have had on anybody. Like, I was gonna publish a manual, Don, that we got from the government.
Why wouldn't you?
Yeah, like, hey, Kofal, have you seen this? It's the manual on toilet ops from the U.S. government. And just, anyway, some days I miss Kofal for that. But anyway, that's Danny's artwork that Dan Kofal hated. Don't know why I went to, cryptocurrency.
It's from my sister in Australia. It's Aboriginal. I got 3 that are kind of similar, different colors, but it's kind of a funky, it's not really modern art. It's just different. And Kofal, that's not his cup of tea.
Oh my God, Don, I wish you were in the office when this happened. And so I'm sitting there, and I'm just sitting in Danny's office, and Kofal just like walks in, like he would just saunter in like 2:15 and like just bellowing. Very early for Kofal. Yeah, at the crack of 2:15, Kofal would saunter in, and he would just start wailing on Danny's artwork, and I'm sitting there, and it's uncomfortable. And I'm like, oh, this is so not where I want to be right now. And because I couldn't tell if Dan was serious because he did it like all the time. And so then I just finally look up at Kofal and go, what's the problem, Dan? You don't like dirigidoos? And I couldn't stop laughing at my own joke.
Tim cracked him up.
Oh my gosh, I cracked myself up.
Tim frustrated him because Tim uses technical analysis, and Dan is all about fundamentals and free cash flow.
Oh boy!
And he goes, he
used to come on the air, and he would rail on Amazon, going, "They don't have any profits. They don't have any. They're losing money. They've been losing money for 8 years." I said, Dan, they're stealing market share and driving businesses out of business. And at some point, they'll raise their prices by a dime and they'll be immediately profitable. And you've got to separate, anyway. So we had that argument, and he could not stand, he wanted all companies that had no debt and had solid free cash flow. And by the time, and a single digit PE, well, by the time you did his screening, you had like 8 crappy stocks that didn't go anywhere in price.
Buy them.
Yeah,
we got the 8 crappiest.
Kofal was the quintessential arguing for a stock, and that's not where I live. Like, I don't even entertain those arguments.
So safe to say he never read the Bible, How to Make Money in Stocks.
He's a great economist, but he just doesn't money manager.
And which is where I started saying publicly that you've never found a good economist who could pick stocks.
No, exactly. I agree with that.
I just can't. So look, I want to talk 2 things real quickly. One, I want to talk psychology because it's happening today. So I did a bunch of sales. I did stock nerds who are clients know all this, what we sold, but we sold some things today. But I want to do Tesla because Tesla is one that I wish I still had. And so I sold Tesla, and so I sold half a Tesla yesterday. So Tesla closes above the 20 wide. I have a position in Tesla, so I sell half of it yesterday, and then as it's cascading down, I sold the other half today. But I really wanted to keep it, and this is going to happen to you stock nerds in these market environments to which we find ourselves in right now. It looks like it wants to close above the 21, and quite frankly, I'm gonna lay my marker out there right now that Tesla closes at 420 today. That's 420. That's where Tesla's going to close today at 420. And so
Wow,
it's the
going out
old,
on a limb, Tim.
well, it's the old Elon prophecy, that everything revolves around 420 with Elon and Elon.
Yep, yep.
And so but it's reclaimed the 21, and I sold it down here. And so what I want to point out to you though, where are the markets? And the markets have had a really nice bounce. Okay, so this probably is the low for a little. You got just close enough to the 50-day. But what I want to point out to you is that if we rail up to the 21 to break the cycle, we need to close above the 21. It doesn't have to be today, but if it sneaks right up underneath it, a lot of stocks are going to be like, oh, that was the buying opportunity. And I kind of talked about that in Thursday night's video, that this could be the best buying opportunity going into the election, or this is your opportunity to sell in a month from now. You wish you would have sold. But look, when you're taking, like for us, I believe Tesla had grown into a 5% position after it started out with a 2% position. This is like the third or fourth time I've traded Tesla to the very, I feel like Don and I have really traded Tesla well this year. Like out of all the stocks that I've traded, and someone's like, well, Tim, it's up 400%. How'd you not trade it well? There are times to be out of Tesla this year, and there are times to be back in Tesla this year, just like anything. But if you got, look, I will tell you my plan here for the old Tesla-roo. So if Tesla is going to jostle around, I want to see it consolidate here. And what I'd like to see is this dark purple line is a 5 exponential moving average. I'd like to see the 5, which is now dipped below the 8, come back up and cross over. And if it does that, nothing fundamentally has changed with Tesla. And that's where it's a really good discussion we're having about Kofal here this morning, because even if you don't know him or know who the hell we're talking about, nothing fundamentally has changed with Tesla. Nothing fundamentally has changed with Amazon, Netflix. Pick any stock. Like I sold MTH. Nothing fundamentally has changed with MTH. Well, why did I sell MTH today? Because it looks like it potentially can close below the 50-day. And that opens up the door to even lower prices. And someone would say to me, well, Tim, if nothing's changed fundamentally, why are you not going to hold on to the stock? Because what you don't know is that all selling takes place on the charts. Like if you want to know who controls the market, it's the mutual funds, pension funds, hedge funds, okay? It's their selling volume that determines price, and it's their buying volume. And so even stocks that like Kofal didn't like the Amazons, without his stellar fundamentals, could go up in price. They left the train station without them. And just like when you hold on to something way too long, like I have a note that I was looking at something, Danny. I had the TV on in the background, when there was somebody arguing for Smile Direct Club. I'm not making this up. I just want to show you what Smile Direct Club has done. It's direct to consumer braces. Everybody knows what Smile Direct Club is, right? Smile Direct Club in April of 2019 was $122. It's a $10 stock. And so I can argue that in the age of Corona, I can make so many arguments why this is such a great business model. But the people that control the market have sold off Smile Direct Club from 122 to 10. And so, right? It's just absolutely ridiculous. And I'm gonna name names here. So, like, there's people that will come on in your life, whether it's Twitter, whether it's somebody you know, and they will tell you that the underpriced stocks, by the way, what's underpriced, or the stocks that haven't moved this year are the ones you want to rotate into. I heard a fella by the name of Randy Frederick, who wasn't really kind to me when I outshined him, Danny, on a stage at a big Schwab event once. Randy Frederick's the head of trading for Schwab, and he's a little stiff. Like he walks like he's got actual penny loafers and pennies inside of his penny loafers, and so little tight. No, joke didn't know. Squeaks when he walks. Stick it. No.
Is he a little preppy for you, Tim?
He's a little high on himself, man. Like, look, little takes himself too seriously. I don't think he enjoys a good fart joke, Danny. Just gonna let that sit there.
And
you're
marinate.
on that. You're on your own on that.
Thank you, Don. Thank you. I was hoping you would just pick up on it and come right in there with it. I didn't know if you'd let it go to the Dutch oven or not, but nice job.
The Dutch oven.
Oh,
Well,
boy,
that's 2 weeks in a row we've made fart references on the show here. So last week it was the strawberry fart flavored water that you were drinking.
Oh, by the way, I've got myself some hibiscus from LaCroix.
So hibiscus is a flower, right?
Yeah. Like
so now people are drinking flower flavored stuff. Is that? I mean that's what's next.
Why would you?
This is ode to wallpaper. If you love wallpaper smell, this is what you want. We've got wallpaper flavored water. That's just odd. Inanimate objects that aren't food.
No, the hibiscus is a fan favorite. There's a couple I really like. Like I like the hibiscus. Here's the thing about the LaCroix pack I pick up at Costco, and if you're listening, LaCroix, which you should be. Isn't that what stock is LaCroix? It's soda. It's SO. Is it? It's not soda. What's the ticker I'm thinking of, Don? It used to be a high flyer. Oh gosh, darn it! My mind just went blank. Don, read my mind. Figure out what stock I'm thinking of, and I'm going to.
I read your mind occasionally, and I get scared and just leave.
No, it's okay. We're talking LaCroix here. So the LaCroix pack, Danny, at Costco, it comes with
Fizz.
Fizz. Thank you, man. I was thinking of Fizz. That's who owns LaCroix. What's that doing? Curious. Oh boy, this is 126 to 80. That not on a monthly chart. Let's look at that on a weekly.
Not bad lately. That's not bad at all.
Yeah. Oh, you know what, Don? My storytelling led to.
I mean, it's not under $10, so we can't buy it or recommend it to anybody. But
yes, there you go. Damn it, you're making me choke.
On LaCroix.
It's that
LaCroix. So the owner is bat blank crazy at times. He has written some long letters. If you want to Google the owner of LaCroix, there's been some good stories written about him. Anyway, the pack, Danny, when you go to the Costco to get the case of LaCroix, it comes with a hibiscus. It comes with another flavor that it's not. Is it water? It's watermelon. And then here's the problem. Watermelon. Yeah. Here's the problem. It comes with 2 packs of limoncello. Not my favorite.
Limoncello?
Is it?
Limoncello?
Yeah. Yeah. What are you saying? What am I saying?
I have no idea what you're saying.
Like
what does that
Italian
mean?
thing.
What does that mean?
Well,
Limoncello.
it's not a lemon flavored violin, but I think I'm pronouncing it right. Limoncello. Yeah, I'm going to Google it. You've forced me now to Google limoncello. So L-I-N. No.
Well, I mean, at least the last 2 are fruits and not flowers.
It's here. Let's do LaCroix.
Oh, I see. They're getting fancy with the
exactly
Italian lemon liqueur.
Yeah. And so they put 2 packs of that. You know what? We are so pissing off to get to the stocks crowd. Look, it's not on purpose. You just got to relax. Like the whole world isn't this intense. People need the information we're giving them. So they put 2 packs of that in there. It's not the best flavor. Like quite frankly, it tastes like lemon pledge.
That's why they're. At least you'll have a sterile mouth.
I don't think Pledge gives you a sterile. Danny,
All
Pledge is
right, at least you got a waxed mouth, whatever, polished mouth.
If you don't like the flavor, what do you do with them? Do you force them down anyway, or
I
does
do.
Tanya
Yeah,
like
no,
them?
I
Or
drink them first. I get them out of the way. Like it's like I'm eating my vegetables first, so I plow
the
through.
savings is so amazing that you're going to
That's why I
force
don't like
down
those mixed
something that you
packs,
don't
because you
like.
always get something you
Well,
don't like in there.
well, I know it
You're
sounds
right, Dan.
ridiculous,
You're absolutely right.
but at the Costco, the LaCroix are 33 cents a can. Sometimes they go on sale down to 28 cents a can. At the Piggly Wiggly, they're like 40 cents a can.
I
Look,
would pay 40 to drink something I enjoy than 28 to drink something that I don't.
it's not so hard. Well,
I'm that way. I'm just that way.
well, some of us
Tim's
can't.
very cheap, you know, so,
Yeah,
so
they're
he
so high
can
on the
go to an
hog down in
expensive
St.
mutual
Augustine,
fund.
Florida. That 7 cents it adds up if you pound in the LaCroix.
What's for dinner, hon? Well, I got this out of date chicken at the market. You might get sick,
But it was
but it was
cheap.
too cheap to pass up.
Got some beef tongue, which they call it something else, so you don't know it's beef tongue. And let me tell you something.
They call it
Never.
limoncello.
That's oh, it's so great. So if the guy from Fizz is listening, 86 the limoncello, will you please? Because I like to see hibiscus. Let's talk some stocks here. So
Please.
so look, so we're looking at the NQs here. So you've had this pretty much 2-day sell-off now that's taking you down into the zone of the, if you're new to the show, let me just do these real quick. That's a 5, an 8 exponential, a 21 exponential, a 34 exponential. Those are all fib based. And then you've got a 50-day simple here. Look, you're well off the lows. You came all the way down here, just about what, almost to 11,000, and now you're trading what, up here 200 points higher, 300 points higher. If you closed above the 21, that's super bullish. That's a right now. This is a victory for the bulls on today, where it looked like you had a flush coming. So often people want to know. Like how can you tell people are getting wiped out? And so what I encourage you to do is this: is go to the ticks, and then oops, it's tick. I apologize. Go to the tick, put it on a 2-minute chart, and so the ticks. And I'll scrunch this up here for you in a second. They got down this morning. So here is. Let me just get this over here. So at the cash open this morning, so here's Friday, you actually had a nice some strong buying ticks, and then you got down here and you started the process of people getting relieved of their positions or margin called, and you got down
relieved of their positions.
Yes. Well,
Let me believe that for you.
Well,
more important, they got mugged and they got taken from them.
Allow me.
Yeah, and so what happens is when people are in margin and they're told to put up or shut up, they don't want to put up any more cash, they sell. And these flushes down here are people most likely getting out. And the only way to stop this cycle, by the way, of like once you start getting these kind of tick levels, and you had a minus 1600 tick yesterday, you got to get plus 800, plus 700, plus 800 tick. And you can see that you broke the cycle right here at plus, it was just about 800, close enough for government work, 750 to 800. And now you can see that the ticks, and if you don't know what the ticks are, have a general buying tone to them. The ticks are the actual buying and selling coming off the New York Stock Exchange. And so when you get plus 800 to 1,000, that equals institutional buying. And when you get minus 800 to 1,000, that's institutional selling. So you okay, Don?
Yeah,
Don,
Snickers
okay?
is on the loose. Snickers is on the loose.
Oh, what stock does she like right now?
Right now, she likes dinner or lunch is about what she's thinking about.
So the
Nutty,
ticks have a general.
nutty dog.
Is that CMG or is that?
Well, she does have a touch of diarrhea, so that may have been.
Oh, and there we go. The first time we've mentioned that on the
So we
show.
got
I tell you
farting and
what,
diarrhea. Okay.
yeah, we are batting a
Man,
thousand here.
gosh, I don't know what to do with you guys.
Snickers is, Snickers is 13, and on one of these shows, I mean, she really doesn't have that much time left, realistically, if you look at the length of, she's already a year and a half over her lifespan.
You know
But
what?
she doesn't, and she's only mildly slowing down, so, she may live forever. Who knows?
She
One day
loves
you
you,
should just
Don. You
put
take
Snickers
good
in the
care of
chair,
her.
Well, I'm very
and then
lovable,
you just
Dan.
talk off camera, Don. Just put Snickers in camera view, and then you just talk off screen. I'll do the whole show with Snickers in this little box here, which I think would be awesome.
We can edit it and put Snickers' head on Don's body.
Could do
With the
Oh,
that.
rock and roll T-shirt.
that
What shirt are you wearing
Oh,
today?
it's
what
not
shirt are you
rock and
wearing,
roll
Don?
today. A little going a little out of genre with the Eagles Jimmy Buffett.
Oh,
Absolutely the best non-hard rock show I've ever seen.
hey, you know what I'm
Are the
thinking
Eagles
about?
not rock and roll?
Hang on. Beatles Mania is tonight uh, over at South Fork, which is pretty close to my place, where they used to do Dallas, the South Fork Ranch, and they've got like an event venue there, and they're
You're
going to have.
having outdoor concerts in
Well,
Texas?
and they've got an. I don't know if it's going to be outdoor. They do have an outdoor pavilion, but they've also got an indoor thing. I think it's probably going to be outdoor, but it's social distancing. It's not that much, but it's,
Gavin Newsom would not be pleased with that.
huh?
Gavin Newsom, if he was the governor of Texas, would not be pleased with that.
Governor Newsom wouldn't be the governor of Texas.
Governor? Hi, Governor.
Governor. Hey,
Were you
governor.
trying to say governor and Gavin at the same time? And
Governor.
Governor?
Governor.
That's awesome. So here's the thing, stock nerd. So we'll see where the market ends up today. We did a bunch of selling, cleaned up some books. Me wishing I had Tesla, but what the old adage some days is wishing you would be. I'd rather be wishing I was in and out than wishing I was out than in. So raised about 30 to 40% cash depending upon the account. So got some. If the opportunities present themselves and the markets want to shape up and not ship out, then definitely have some things we can do. Danny, I'm telling you, Tesla's going to pin at 420 today. The best
Maybe.
thing is, stock nerds, look, it's 11:14 Central, 12:14 Eastern, 10:14 Mountain, and 9:14 on the West Coast. And so I don't know what's going to happen by 3 o'clock, but my prediction is 420 for Tesla.
And by the way, just for kind of full disclosure, so there's a couple different ways to skin a cat. So Don, I think, still owns his Tesla,
Yeah.
but he threw on a NASDAQ hedge so
Mhm.
that he dropped his beta to about 0.6. And Tim and I raised cash, which also got our beta way down because, it's a 3-day weekend. The market's weak. Our clients, don't pay us to speculate. They want to,
No,
be able to sleep at night and
there were some
make
really
money.
good profits to be had in a bunch of stocks, and we'll cover that in a minute. But I want to show you the relationship I think that's crucial moving forward here, and it's this dollar. So I want to point out the dollar bottoms. So here's 6.8, and I want you to notice that the dollar bottoms here on 6.8, and then starts making its way towards what, the 21, and just keep this time frame in mind. I'm about to show you the QQQ. I could show you the S&Ps, but let me show you the QQQ. So here is 6.8 and QQQ peaks, but then it comes down to the 21. Okay. What is that same period? That's when the dollar is rising and markets are falling. And so if you like type in SPY, look at here, it's a little more pronounced peak, and the S&Ps come down to the 34 here. And so what is that telling you? That's telling you a couple things here, stock nerds, that look, the rising dollar is very problematic to markets. You can see the results. The Fed will desperately do anything to keep this dollar from going higher. If the dollar gets out of control, and look, dollar's at lows. It's not like the dollar is, you've got less
Raging
buying power.
bull.
Yeah, the lower dollar goes here, but the dollar is very problematic moving higher, and the Fed desperately doesn't want this to happen. And you can see the relationships between markets. Now here's the S&Ps down to the 34. And so where has the dollar stopped? And I want to explain this in just a little bit more detail here. So the dollar has stopped as I zoom in here at the 21. So look, if the dollar now it hit the 21 and wants to revert lower, this is going to be a repeat, in my opinion, a repeat of the June 8th to 11th time frame where you wanted to buy those markets. If for some reason you wake up next week and the dollar is substantially higher, what's going to happen is markets are going to continue to sell off. And so, quite frankly, I want to see the dollar come off. I want to see markets retake their 21 exponentials. And then I'm going to go screening, which we're going to do here in a moment, and start finding some additional ideas and put that cash that I have now to work. And look, I could, like I said, we're going to cover the stocks we sold, what we took profits in. I could do that. I could go right back into those same stocks. And some of you are often always saying, why, if nothing's fundamentally changed, why am I selling? Why are you taking profits? Because it's a market and anything can happen. And that relationship I just outlined, maybe this is when it breaks. Maybe the dollar wants to break higher. I don't know. But I'm not 100% in cash. I'm actually not even bearish. I was saying to Danny, I'm not really bearish. I'm just cautious. And cautious is a way to be. It's a way to do the ebbs and flows. Cautious is how you have a 7% drawdown when the market is down 35%. And then outperform the market 3x, which Don is doing it. Don is clearly above 3x the market. I'm having with Danny a fantastic year. And the drawdown has been minimal. And if you can execute that kind of game plan and just trade with the ebbs and flows, imagine how better your life would be over the course of time, not taking these severe drawdowns and giving up these gains. Danny, did I do a good job of explaining the dollar market relationship? Anything to add there?
I think you did a great job, Tim. Nobody more shocked than me.
Oh, good. Okay. That's the common refrain, Don. I love it. That's what I know.
Awesome.
Oh, we gotta have some fun here. Come on, guys.
So look, here's what I want.
Dan, you take enough shots, so you might as well dish a couple out.
I'm gonna start giving it back, man. I'm gonna get my pitchfork and.
Sorry, Danny. I see the artwork, and all I can think about is my didgeridoo joke to Dan. And man, Dan hated that day so much. Didgeridoo.
That's the one with the sea turtles and the stuff. You ought to see the one over there with the shark, and then the other one with the kangaroo.
Oh, well, I think we should do the Revere tour next week when you're in the office.
I will.
Yeah, we'll plug the machine. So
I just had everything plugged into my, with my 3 monitors and everything plugged in. I don't want to do it live and try to unplug now, but I can be mobile.
No, we'll be mobile next week. So look, this is also a feather in the bull's cap here. This is the highest. You can see June. Let me get this here. June is put call ratio is right there. That's how high you got before markets bottom. And look, that's not even a very high put call ratio, folks. But you've got another one here that you got a put call ratio that's finally rising. I apologize. I'm hitting a whole bunch of things on this computer. And you finally have the 10-day simple moving average on the put call ratio starting to turn up. So look, I think you want to be really careful here about being, I'm a bull, market's going higher into the election, or I'm a bear, and this whole thing has been bogus since the get-go. Those are mistakes, in my opinion. It leads you to hold things too long, or I think even worse, you're not participating. And Don and I always comment, like without fail, nobody wants to buy the dip when the dip opportunity comes. And so, well, Tim, you just
especially not when it comes the way it did over the last 2 days. I mean, that was a 2x4 upside the head. That was
it was Hacksaw Jim Duggan's, wasn't it?
God, he was the most annoying wrestler. I hated him.
Really?
With the tongue sticking out of the side of his mouth and everything all the time. He got on my nerves,
Simmons
man.
Did, Don?
No. Gene Simmons did not stick the tongue out of the side of his mouth, Dan.
It's a different tongue, Danny. It's a different
Gene
tongue.
Simmons was more like this. See, you opened up the Pandora's box, Dan.
That's why never mind. I was gonna say that's why you guys like Don likes wrestling so much. They all wear paint and costumes and stuff and stick
and
out.
Now it's time to bring out the collector's edition.
Here we go again.
Of the 1999 Gene Simmons Playboy
George
Collector's
the
Edition.
Animal Steel had no paint or makeup. He was
He
the
did
most.
not.
He had a singlet, Danny. I don't even think he wore trunks. He wore.
I'm
He
sorry, I
wore
never
like
watched All Star Wrestling. Even when
All
I was a
Star
kid
Wrestling.
or whatever.
WWF.
All right, whatever.
Now it is. Back in the days, there were 3 W's.
Yeah.
Worldwide Wrestling Federation. And then they shortened it and then had to rename it because they were sued by the
Animal people.
World Wildlife
And
Federation.
to think they even had George the Animal Steel. They could have, if the World Wildlife Federation
George
wanted
the
to
Animal,
actually
what? Seal? What?
Steel. Jesus,
Steel.
you don't know who George the Animal Steel is?
No, I don't watch
Come
that
on,
fake. I don't watch
Dan.
that fake acting,
You don't have to
acrobatic
watch it.
stuff.
I mean, some things just transcend wrestling.
Oh,
Jesus,
George
Danny, come
did not
on.
speak. He would,
No, he didn't
he would,
speak.
hey. That's all he would say. Hey.
Danny, right here he is. Do you not see him?
He was covered in fur, and
Yeah.
he would eat a green lollipop before every wrestling match, so his tongue was always green. And he would eat the turnbuckles.
Hey, is it true? Oh, by the way, this guy, I
did he
love
ever get an Oscar?
Gene
Hey.
Okerlund. Danny, I think he was a psychiatrist. Like, I think in real he had his degree.
Mean Gene was the best. Is he still
Is Mean
around?
Gene still with us? I was just about to ask you
I
that.
sure hope so.
I love Mean Gene Okerlund. The best side. I wish Mean Okerlund would have been the sideline reporter for all sports: football, baseball, basketball, tennis. I want to see those. I want to see those interviews with Mean Gene Okerlund and like John McEnroe. Give me that.
That'd be legendary.
Oh my gosh, Connors.
Anybody with Johnny Mack would be good.
Johnny Mack was the best.
He's a great commentator, and he's funny.
So
Connors is kind of dry. He's a nice guy. He's not a good as commentator as Mac.
Here's a 5-minute chart at 10 o'clock. Dixie continues to fall. So now what we're going to do, stock nerds, is put the NASDAQ futures up here from 10, and you can see how they bottom here at 9:30, and now they've been trending, trying to trend higher. We'll see where they go, down 3% for the day, but that's the relationship. That's what you want to watch. And so it's a market anything. So how do all major begin, Don?
How do you cut out a little bit there? I don't know if it's my end or your end.
How do all major sell-offs probably my end. How do all major sell-offs begin?
Well, you've got to make a top, and then it's a process. And if you mark the moving averages, first you break the 21, that's the short term. Then you would break the 50, that's the intermediate term. And then if you get down to the 200, that's when the market can get in serious trouble.
So I want to document this with you, stock nerds. I want to show this to you. So I took Don, stand by to go over the positions that you sold. So this week, let's see, yesterday, Danny, I got to look at my notes here because we did a lot. Sold Zoom. No, today we sold Zoom, sold CRM, took gains in all these. Yesterday, sold half of Tesla. Today, I sold the other half of Tesla. So let's see, SSO was yesterday. Sold all my SSO yesterday. Sold CDNS yesterday. Let's see, sold Spot, if I'm looking at my notes here. Oh, and I sold half of RH, and I'm holding the other half for run earnings and MTH. So
and today you also sold Meritage and CRM.
Yep. Yeah. Oh, I got those. Yep. So look, you have to be willing to trim when you break critical levels. So what happens to traders when traders become investors? What happens here is you break critical levels in markets, and 70 to 80% of stocks are going to follow the general market's trend. And then what happens? You're like, let's pretend for a moment that you're down 5%, and you're like, it's only 5%, but then 5% becomes 10%, and you don't do anything. But then you break the 50, and then now you're down 20%, and you're like, well, I can't sell now. It's going to bounce. That's the trap. all big sell-offs start as small sell-offs. So this could be a small sell-off and we go right back up to new highs. Could be. But, and if we do, I've got cash to work with. But if I need to sell more on Tuesday, Wednesday, or Thursday of next week, believe me, I will be in there raising more cash and probably if we break the 50, getting short. Or the moment that we invert on the VIX futures, I will be probably taking short positions on and selling a little bit more because I know what that leads to. And so, Don, what did you do? A couple questions for Don. Don, what did you sell this week? Number one. Number two.
Let's go through the charts as we mentioned them so we can talk about some sell rules.
Oh, yeah, that's what Don with the great idea that I should have employed. Go ahead, Don, give it to me.
Start out with Chegg. This was a Monday sell. I came into the week with my beta over 1, about 1.1, and cash about 8%. Market was fine. Monday, very strong up day, outperformance by leaders. Tuesday, same situation. Wednesday was when we started to get into trouble with a hard reversal, but we finished back near the top of the range. So actually, Chegg I got out of when it broke the 50-day on Monday. So yeah, there. And then of course Wednesday, I'm thinking, I just got shaken out of Chegg. That was and look at it now. You just never know.
Yep.
You just you have a system. You have an edge. If you follow certain rules, you have to follow the rules. If you start breaking the rules, then the edge that that you have in place goes away. So yes. Chegg, a close under the 50, a further low under the 50. That's my sell rule. I could have waited until the end of the day. I didn't. I sold it. 2 days up. Chegg looks like it's forming the right side of a base. Damn it, no. And then 2 big down days.
Now you look like a damn genius, Don.
Well, it's early, Dan. That can change very quickly.
Hold on. Let's do a Tesla check, Don. On our way to 420.
I just saw that, Tim. You did call that. I have 3 stocks on my entire screen of 150 green on the day, and Tesla is one of them.
It's going to 420, man. I tell you, this Elon Musketeer, and it's making me regret. And I look, I wish I still had it. You're going to get a sense that when I repeat it for the 18th time in this show, that I wish I still had my Tesla. But look, you got to be willing to frozen your stocks and let them go, as Danny would say. Danny loves Don. The Dina, who sings "Let It Go"? Danny, Dina Menzel. You're the one telling me all about her work.
Let it go, let it go. Is that Frozen? What are you talking about?
That's what he's talking about. You're a big fan of that, huh?
Are you in the show with us?
Yeah, I'm trying to follow your streaming consciousness. Damn, it's kind of hard.
Hoping you were going to come back with, is that country or Western?
That's not country.
What movie is that from, Don? I like both kinds.
I don't know, but that's a good line.
That's pop, whatever.
I like both kinds of music, country and Western. That is a line from a movie. If somebody could shoot me that would be fantastic.
And country and Western is dead, by the way. The country pop has totally replaced. I mean, every song has a guitar solo in it now. Every country song has a guitar solo.
Taylor Swift? Did the Swifties ruin
No, I
country
think
music?
I take it back to Shania Twain.
Really? Shania Twain now seems like country music when you listen to 1993 Shania Twain. Yeah.
You're right. Man, I feel like a woman. Yeah.
She's feeling all right. She's
and you know who
hang out.
And her the guy that made her big was her husband, John Mutt Lang, who was a big producer for 80s hard rock bands.
Really?
Yes.
Danny, do you know the best part about being a woman?
No, Tim.
It's really their prerogative to go out and have a little fun.
If those are the lyrics, I don't know them.
Oh, you don't know the lyrics to a Shania Twain song? Oh, come on.
Sorry, I don't. I mean, no, actually, I'm not sorry, but I don't.
Why don't I know that?
You've got a lot of incidental facts floating around in your head, Tim, that I have no idea why you know.
Knowing it is one thing. Admitting that you know it, that was where your mistake happened.
Yeah.
You know what, Don? If anything I've established with stock nerds and market lovers is that I am very okay with myself.
Yeah, that's true.
Yeah. Oh, what else did you sell, Don? I'm sorry.
So let's go. Okay, so that was Monday. Tuesday,
Yeah.
a buy, BLDR.
You bought Builder?
Now, I
That's right.
bought Builder. Now, Builder
Yeah.
had a merger and that little gap up day there. And then the second gap up day, usually when you merge or buy a company, it's considered a negative, but the
I'm sorry.
positive reaction to that got my attention.
This is a
So,
really nice hold. Don, this is a good, I like this one.
and that coincided with the ITB bouncing off of the
Yeah.
50 or the 21-day moving
That's
average. And
crazy.
again, I sized it small enough to be able to survive that shakeout that you saw like
Right.
that today. Probing position. The first position is 2.5 to 3%, and then I can add to it if it starts working. So then the selling started. But it started on Wednesday. I didn't sell anything right away. I added the SQQQ. I had a 4% size. I doubled it up to 8% on the SQQQ. My thought with this is I know what percentage of my portfolio the big stocks are that I don't want to get shaken out of. And in order to avoid shaking out of it, I size SQQQ so that the beta matches the beta of those leading stocks. And it just serves to smooth the equity curve while these things shake out. And it's something I really don't have to take off.
Nope.
You know what? I never even ever look at that SQQQ chart. I go by the derivative, which is the QQQ. And when that got overly
That's why I was
extended,
amazed at it. Yeah, I was amazed that it stops at the 21. That's why I was like, look at that. I rarely look at SQQQ. I look at it when you bring it up, I think.
Wednesday when I did the video, I pointed to just how ridiculously extended we were, and I went to a red positive on the trend chart, which means we're just too extended. Get ready for a pullback. Just be prepared. Don't pile into stuff at this point because you're waiting for the 2x4. So SQQQ didn't really sell anything. But then Thursday I started taking stuff off. But before I took stuff off, I added again to SQQQ because the markets really were looking with the hard reversal right out of the gate at the open. Everything that I had, it seemed, was extended, and the things that weren't extended were close to being stopped out of. I was planning on being stopped out of a couple things. I did. The first thing I got stopped out of was FSLY.
There you go.
So on that break below the moving averages on Thursday, Twilio.
Haven't seen Twilio in a while.
Very common. You can see the uptrend, kind of a common theme on most of these stocks. Teladoc, TDOC, broke the 50-day. And Trade Desk, TTD, which I had just added to the day before because it was acting so well. Look at that breakout, that nice breakout on the Trade Desk. I added to it. It failed the next day. Don't argue with it. Sold it on a Thursday. And then this morning got stopped out of APPS on the break of the 21. And took a third off of PINS, PINS, which was my largest position. That took that from about an 8% size to a 5% size.
Nice.
And
So
that's.
Don, I wanted to make one comment because
Go ahead, please.
So you were talking about instead of wanting to sell out of some of the leader stocks that you had on the NASDAQ, you took that SQQQ double short position so that you
triple
so that you could hedge and you could manage it, and you actually kind of calculated how big of a position you needed so that it would reduce your beta accordingly and offset those moves in those big stocks. So I guess you're taking it, you're saying it takes actual work, calculations, and math, and you just don't buy a pie chart and sit and just let it go?
That's crazy talk, isn't it, Dan?
Oh man, blasphemy! Blasphemy!
Danny, as Danny tries to drive the show in a direction that I do want to go, so I will. Heaven forbid, Danny. Heaven forbid. I'm going to.
I'm sorry. Did I
hijack
that?
I must say this is one of Dan's better shows.
I didn't want that point to go rushed away, and I'm kind of bored with these. I already know all this stuff because I did it with you guys. So
Well,
I
do you
guess
know
the
about the
listeners wanna
golden
hear it.
ticket that might be in this envelope? I bought more sports cards. I'm going to open them up
Oh,
this
God,
weekend, and there
please.
might be a golden ticket in here. Come on, Danny.
Danny,
Come
I'd say
on.
your reappearance at the office has just really got you back on your complete A
Thank you.
plus
I'm,
game. I
I'm
mean,
sitting
normally
up
you're just on your A game,
chair that
but
gives me back support.
Be
your A
honest. How late
plus
did you
game.
stay up?
And,
How late did you
I'm
stay
thinking
up
about getting the
watching?
mute button if so. Whenever Tim starts talking about all-star wrestling, cowboy music, or his sports cards, I can just mute him, and you and I can talk, Don.
Oh, you want to talk Kiss with Don? It's 3 lyrics. Don, you know what?
It's about 5 or 6 if you want to be honest.
Secretly, Don's listening to those 70s mellow classics that he got from A&M record commercials.
Barry
The
Manilow.
bread.
That
Yeah,
would be
America.
that would be incorrect.
Horse with no name, Don.
Except for Copacabana. Except for Copacabana.
Danny's big insult is, Don, you're like a cowboy and a horse with no name.
Oh,
What do you
boy,
think
I'll
of
let
the
that one
desert,
sit there.
Don?
That was a kerplunk.
Is that country
We
or
go back
western?
to your stocks now, Tim.
What
We
is
go
America?
Stocks now.
You know what America is, Don? Hold on, man. I got it right here. America is Neil Diamond, the jazz singer. Best album ever.
Tesla 419.
Hold on. I'm just gonna flex. Sorry.
Let's talk about the 4 stocks that are positive on my chart right now. I mean, I'm not kidding. I've got 100. I've watched 150 streaming quotes, and there's still literally just 4 that are green. ALB is one of them.
Yeah.
They provide lithium for Tesla.
Oh, shit. Telling you, man. Danny, we might be buying back Tesla. Just stand by for that conversation. There's ALB. That's a really nice looking chart, Don.
Big C, which a couple of weeks ago got a big Facebook tie-in, I believe. BIGC.
Thank you. Big commerce. Thank you.
Yeah. Had that big run up, bounced, came back down. Of course,
that's a run into earnings stock. I don't look at this RH. It's the same reason why I'm holding this RH. I sold half, comes down to the 50. I sold half yesterday, comes down to the 50 today. This reports earnings next week too, and I'm looking to hold that second half. Yeah.
And Workhorse, WKHS, which is drivetrains for electric vehicles.
That is a pretty chart, my friends.
And Penn just turned green. PENN.
That's Dave Portnoy.
It is.
Don.
Off the 21 there, I believe, Tim. Am I correct?
Go up.
You know what? Hold on. Well, look, Danny, he's been right.
He lost over $1 million yesterday.
He's absolutely right in an uptrend.
Even when stocks go down, they go up, Danny.
Yeah.
Stocks are down and Penn is up. Come on, you know that. Mm-hmm. Is that your boy? Don.
No, Amazon just delivered our Keep America Great Trump 2020 sign for the front yard. But we're not going to get political on this show.
Up to the driver. Who were you talking to?
My wife.
Oh.
She just showed it to me through the window.
You better make sure you got a shot.
Wait, hold on a second. I'm going to on my screen, Don. Hold on. On my screen, you're on my lower left-hand side. Hold on a second, Don. This is the window you're talking about? Behind. Can you see? Is my because is your wife outside holding a sign up out?
Oh no! I have glass French doors into my office. I called it a window.
Yeah, you said a window.
It's the glass French door.
Your wife outside going, Don, it's here.
Will you let me in, please?
That's what I thought you meant. I'm like, Jesus, should we address this? That Don's stuck outside, and he get up and go let her in.
Funny.
I thought Don's wife was stuck outside, or okay. Danny, are you having a good show?
I'm okay.
Let's do this. I want to show. I want to do some entry stuff. We got to really. I'll let Don handle how he's going to tell it. Man, someone was getting mugged this week in mutual funds, and I'm not sure if we want to talk about that or not. I'll bring it up and let Don think about how he wants to bring that up. But let me do this first, and then we're going to go over stocks that are on the watch list. I want to talk about Don's 21 over 21. I was going to talk about sector rotation, Don, but I don't know if we're going to get there. We'll try to get there. So here we go. Stock news and market lovers. Before we screen for stocks together, give you some ideas. Look, there's a couple things on revereasset.com. I want to point you to. Go to Revere Asset, go to Daily Market Insight. This is where you're going to find videos like this, much larger sell-off coming Friday, or tonight, after you watch this video, or whenever you're watching this video, you're going to get Don's 21 over 21 stock list. This is, my friends, the premier stock watch list in the industry. If you want stocks before, see, this is the critical thing that we do at Revere. So here's a stock chart. And what we're doing is we're identifying stocks that have our 70%, 30% fundamental mix that are in the top 10% fundamentally of all the market, of all the tradable stocks in the world. We screen for those. And then what we're doing is we wait. We don't buy them up here. We let them come down, or we wait for like a 21 exponential moving average. We wait for the consolidation, or if there's a gap rule that Don likes, and then we give those names to you before they make their biggest price moves. That's,
And make sure that they're not under $10.
Man, we're going to do that screen today just for you guys. But the trick here is identifying the biggest potential winners before they make their biggest price moves. Anybody can look back and go, you should have bought XYZ. Yeah, of course you should have, whatever that stock is you're talking about. What we demonstrate to you, if you haven't figured it out, is we buy those stocks before they make their biggest price moves. And when they're not working out, because we're working with a consistent set of datum, Danny, datum. We're working with a consistent set of
That's
datum.
not a word.
That's totally a word. You can date them, Danny. You
Maybe
just
in
can't.
Star Wars, there may be some planet in Star Wars.
Yes, planet Datum. It's right next to Bookum Dano, planet Datum. And so the trick is to find them before they make their biggest price moves. And when they're not acting right, it's because
It is
we're working.
a single piece of data is a datum. I've never used that term in my life.
That's
You want me to
because
flex again?
you always take multiple data points at once, Don. You don't have to just digest one at a time.
I feel like there was an insult in there.
Yeah, the superior. Tim
So
can only handle one datum at a time.
can you use it in a sentence, Dan? I'm telling you, he is alive at the office. He's
He is. A lot of coffee today, Dan, I'm guessing.
I did have a bunch of coffee. We need to hurry up. I got to go to the little boy's room.
You could just get up and go.
And leave you guys unattended? I think not.
I think we're okay.
Possibly a good move, though, Dan. Good thought there.
So that's what you want to do, is you want to identify those stocks before they make their biggest price move. So we'll talk about that. Don will have that 21 over 21 coming for you. And then listen, if you're watching this, hopefully you're getting this. This hits Saturday. What you're watching right now comes out on your favorite podcasting software, goes to podcast tab Saturday mornings. But if you have any questions, concerns, comments, take umbrage with anything that I'm saying, nothing that Danny would be saying, of course, reach out to us. Listen, 855-732-5932 is how you get a hold of us. There's my email address if you have questions. Don's email address if you have questions. America's Fiduciary also serves as the complaint line. And so if you have complaints, because there are a group of people out there that say just get to the information and stop with the nonsense, listen, be entertained. Like there's so much tightness that comes with being in the markets or watching the markets too closely. Smile. Look at Danny smiling. He knows that when he goes into his car and he puts the 8-track in, it's going to play both kinds of music, country and western. And so is John Denver country and western? What's John Denver?
Oh, you know what's funny? True story. So he was kind of crossover. He was more like, American pop or folk music, but he kind of dabbled in country a little bit. So he actually won a country music award. And so when the guy that was, I can't remember who it was, my wife would know, the guy that was giving him the award that read it, when John Denver won, he goes, "You've got to be kidding me." And he tore it up. He was live.
Was that Hank Williams
went on a
Jr.?
rail. It's like, you
Who
got to be
did that?
kidding me. That's not country. And he tore it up. They had
He
to
had a
escort him
song
off
that
the
said,
stage.
"Thank
He was
God I'm a
pissed.
country boy."
Yep. Yep.
That was me when Jethro Tull won the heavy metal Grammy one year.
Ooh,
What?
Jethro Tull.
There's a name you don't hear
Aqualung.
that often.
Aqualung.
Are they making?
Sitting on a park bench.
Are they making Jethros anymore?
Don accidentally paused himself. Are they
I
making
No,
think
what?
phone call came in and it goes over to the iPad too.
Oh.
Uh,
What'd you say, Tim?
They're not making any more Jethros, are they? Like when people come out of the birth canal, they don't go Jethro. That's what your name is. I don't think, has there been a Jethro in America? I don't think.
I think the
I
Beverly
would-
Hillbillies killed that off.
I don't think there's a Jethro been named in America. And I challenge anyone who's been named Jethro in the last 10 years.
And what year did people who named their sons Richard stop calling them Dick? Another thing to think about.
Dick Van Dyke.
That
That's
used to
the
be,
year.
see, that's back in the day though. But that was a very common nickname for Richard. You just don't see that anymore.
Dick Dreyfus. They don't say Dick Dreyfus.
Doris was a common name, and now it's not.
You want to get off the Dick name, Danny? Okay, we can do that. We can go Doris.
Very obviously what Dan's trying to do there.
You were talking about common names of the 50s. I thought I'd jump in.
I don't even think Jethro was a common name in the 50s. When's the last
I don't know how you brought up Jethro to begin with.
Well, Don said Jethro
I don't know
Tull.
anybody that's named Jethro and never
I don't
have.
think there's a mother
Jethro
alive.
Bodine,
Jethro
Beverly
Bodine.
Hillbillies.
Right, I
Come
know.
on,
That was a fictional character, Don.
But
That's
it's
what I
Jethro.
said.
Jethro.
That's
Named
what
him
killed it.
Jethro.
That's what killed his, anyway.
You think
Or
you
Ellie
think
Mae,
the
for that
Muppets killed
matter.
John Denver's career? I mean, I know a plane crash killed John Denver's career, but do you think the Muppets killed it? Like, did he too soon? Awful. But remember when John Denver was in a Muppets movie? Was that it for John Denver? Was that the peak?
Probably.
Probably. Kiss ever
I
go on the
would
Muppets?
not that I'm aware of, but it wouldn't surprise me if there was a buck to be made for Gene, he'd be there.
All right. So
Probably
look,
made a guest appearance.
I would love to find the Muppet Show where Gene Simmons makes an appearance. What the hell's Scooter doing that day? Being all freaked out. Scooter was the backstage guy, Danny. He was the one.
Got it.
He was
Got it.
managing.
It's been a long time since I watched Sesame Street, Tim. I know you're just getting into it, but
Well, it was really the Muppet Show. Sesame Street was a different show.
yeah.
No technicalities.
They were
there?
born.
Okay.
The Muppets were born from Sesame Street.
They're puppets, Danny. I don't think they came out of anyone's birth canal. So 855-732-5932 is how you get a hold of us. So look, if you have questions on anything that we're doing, our sell rules, the buy rules, this is, look, not every sell-off is a buying opportunity. Like I said, they don't tell you in advance which sell-offs are. So you have to have a set of rules to operate around, and you need, buy rules are just as important as sell rules. And so you don't hear Don and I mean, Don mentioned the markets were extended. That's not an opinion. That's just what they were. But now they've come back in. So like I still say, this could be the best buying opportunity into the election, or this could be the best selling opportunity. And you just don't know. And a lot of it's going to hinge around what the indices do around their 21 exponential moving averages. You want to be really careful around your stock nerds. If you like the strategies to which we espouse in these videos, please call us 855-722-5932. We'd love to have you join us. Listen, we're a bunch of fun to talk to. Danny's more fun than us on the phones. Speaking of getting a hold of us, look, if you want to get a hold of me, email is not the worst way, but it's the worst way. Twitter is the best way. And I say that because my inbox fills up, and the questions that people will send are sometimes very long. Danny knows I can only handle one piece of datum at a time. So long emails throw me off. So it's why I like Twitter. And so if you wanna get a hold of me, I implore you to follow me on Twitter @TJRazor, and just let me know you follow me. Hey, Tim followed you. I'll follow you back. And then this is like a text machine, you and I. I used to get my cell phone number out, and then it just got to be too much. So you message me, I'll get back to you. It's short, it's brevity. I love it. It's one piece of datum for me to deal with. By the way, look how tall this guy's gotten, Don.
I saw that this morning as I was like, Jesus.
Like he's
Yeah, that's
crazy
because
tall.
of Tim's wife. That's not Tim.
Yeah, that's not because of Tim. Yeah. Yes, I've gotten shorter as I've gotten older. The Remster here is just incredibly tall, just growing up way, way, way too fast. And so here's Danny. Danny, I don't think you know it, stock nerds, used to be a tennis pro. Is that right, Danny? Tennis pro.
That is, in fact, I used to play doubles with her little brother, Chris Everett's. John Everett was my doubles partner at Vanderbilt.
Yeah, and so there's Danny's Twitter. One Danny Stewart is how you get a hold of him, and same dealio there. And then Don Vanderboord, who will give you dogs running on the beach, nice sunsets to look at, and also give you a bunch of stock information as well. At D Vandenboord is how you get a hold of Don. And look, you follow us. I know some of you are so against Twitter. Look, don't be against Twitter. Just follow us. Communicate with us. It's the best use of that tool, in my opinion. We spread a little bit of joy every morning, and then when we have something important to say about the markets, we pretty much put it there first, and then we send it out to clients that night. All right, you want to do some screening for stocks, Danny, or do you want to do what do you want to do?
Sorry to tell you, Tim, that Tesla topped at 419 and is now back down to 403.
Oh, just a bit outside.
Not quite 420 on the bounce.
That was the fake out.
You do have time though. You do still have 3 hours and 8 minutes until the market closes.
Yeah, maybe we'll just keep the show going, Danny, for 3 hours to see how this.
Hey, I'm ready. I'm there, man.
So look, before we do screening for stocks, where we're going to show you the div screen, the growth screens that we use, and the stock screen that Don absolutely loathes, the $10 screen. There's a scourge. How would you go with scourge? Bad people, Danny. Like it's a scourge.
Like say that again.
Scourge, like SCOURAGE. Am I spelling that right? Like a pandemic of bad people, like a hepatitis. Scourge. Thank you. I knew we'd get there.
People, but it's okay.
Oh, hold on. Can't score.
It's like a thing happening. Like it's a scourge on society.
Well, bad advisors are a scourge on society. Thank you for bringing that up.
Okay, fair enough. All right, Tim.
Yeah,
you pulled that one off. I will get that.
Like there's a lot in America. Most of them work for, Raymond James, Edward Jones, Wells Fargo, Morgan Stanley has their awfulness. But look, we get people that come into the shop that bring us portfolios, and they watch our videos, they watch us interact with you, stock nerds and market lovers, and they wonder why their advisors have them in certain things. And it's still happening where we find people that are being placed in mutual funds that are charging outlandish fees. We don't use mutual funds unless we're forced to in a 401k. Our default would be ETFs, and then if we have to do mutual funds, we do. And we have screening criteria and things that prevent us from acting like the scourge of society, Danny, which is what these people are. Thank you. Don, do you want to tell the story about what you found and the disgustingness of what you?
Yeah, doing a current portfolio review for a prospective client. We look at what they're in, we look at the charts of it, and we look at if there's better options for something that they're in. And it's been a long time. You really don't see anymore in 401k plans outrageously high active funds because so many lawsuits have happened about self-dealing.
All the
trustees are scared. So you really don't see it in 401k plans anymore. But listen to these expense ratios I found on a current portfolio. 2%, 2.2%, 1.7%, 1.3% for a large cap, while you can get SPY for 0.1 or even less. 2%, 1.8%, 2.2%, 2.2%. No, don't do it, folks. And this is the kind of stuff that gives active management a bad name when you're charging. And this is on top of a management fee that a person would be paying. So they're paying the management fee, and then they're paying these expense ratios for the funds that the manager is putting them in.
Yeah. Well, this is someone out there is cynical saying, who's letting them do that to them? Why aren't they looking into this? Here's the sad part. Most of the time it's your friends. You think they're your friends. And look, I often say you have no friends in this industry. Even if you know the person, you have no friends in this industry. You have to be able to have frank, honest, I'm going to fire you type conversations with people in this industry. So many of you go, oh, Bob would never do that to us. Bob is screwing you. You're being screwed by Bob, not Richard or Dick, but you're being screwed by a Bob. And that's the problem. Some of you might be being screwed by a Richard. I don't know who your advisors are, but you don't think your friends or your family would ever do this to you, and they're doing it to you. And here's the thing. These people that put you in these high-priced mutual funds, they do it because they're getting a kickback on the back end. They don't call it a kickback. They call it 12b1 fees. They call it trailing fees. As long as you stay invested in that fund, they're getting paid. They look at you not as a human being, but as a residual cash payment that helps them buy food. That's not how it works, folks. And some of you are saying, well, why don't they just do it themselves? And we have a lot of individual, look, we live to empower individual investors. You know we do. But not everybody has the time or the inclination to want to do what you do on the other end of this microphone and camera, or what we do. And those people still enjoy the show, but they like having some help and some guidance because they've got a 4-month-old, a 3-year-old, and an 11-year-old. Not saying anybody has that in their life, but
Tim, the website says, possessing a positive attitude and a grateful heart, we view our clients as friends and place their best interests before our own.
Oh my God, it says that.
For the love of God.
Such bullshit. I tell you what, man, these are now I can't be nice. These people are a-holes. Look, if you have, and I don't think it's the stock nerds or market lovers that have this issue. I think it's their parents and their family members, because the people that are watching this show, for the most part, they're into it. They get what we're saying. They understand that that's the kind of person who Don's referring to that's going to tell them that insurance is an investment, and it's not. It's insurance. You don't look at your car insurance as an investment. Well, it's an investment against an accident. You're not making any money off of it. Insurance is not an investment. Annuities are not investments. They're insurance. We love our clients. If you loved your clients, you would do what's right for them and not place them in funds that are charging 2%. Stock nerds, if you have a loved one, we'll do this for free. We don't look, whether you become a client or not, that's not, we live to serve the greater good. Look, we don't advertise. We grow because the people you send to us trust that you trust us and they trust us, and we do
no
right
minimums. No minimums.
Yeah, no minimums. I'll tell you what, if you want to go look at the show we did last week, I'll do that in a minute. The transparency we afford you is unparalleled in this universe. Like, we're the only ones coming on and telling you what we sold for a loss if we took it, what we sold for gains, what we're doing, so you understand. We don't talk down to you. I mean, how many times did the person with the 2% mutual fund fees with the lie on the website that we love our clients? No, you don't. We've been told, hey, everything's great. The opportunity cost is so freaking great. Do you want to see what they are? Don, get ready. Stand by, Don. This is a Don alert. We're about to do opportunity cost. Okay, so look right here. I've got a chart that I'm bringing up on my screen. And so this chart, if I can get my screen to work, is Don did a video where he referred to the pie chart pinheads, which live in, apparently there's an amalgamation of them, Danny, in San Antonio. Is San Diego known for pie chart pinheads, Danny? I know that's where you grew up, right?
They're known all over.
Really? So
Yeah.
You've got a cluster in St. Louis at the Edward Jones Dome, right? Like, it's like the corona, they break out in certain places. I know there's an outbreak of pinheads at the Morgan Stanley office in Pennsylvania, Berks County, if you guys want to go find that place and take your dogs there to do the business. And then there's another outbreak at that pirate ship that Tom Brady resides in Tampa. Raymond James, Daniel, is who that is. And then as the aforementioned, empty. You know, the vapid souls that work at Edward Jones are just as empty as the Edward Jones Dome in St. Louis. I don't have anything for San Antonio.
That's okay. They're there. They're there.
The pinhead pie chart. So Don, can you take me? I'm going to try to make this chart a little bit bigger for stock nerds. This is a screenshot right from Don's video on Monday night. And can you walk me through what we're looking at, why we're looking at it? And I'm going to write this up here because I want to see it. The opportunity cost, which is almost immeasurable by being with a pie chart pinhead. Don, go.
Yeah, what I started to do was go through the returns year to date of all of the major indexes. So your S&P 500, your NASDAQ 100, small caps, mid caps, Dow Jones, uh, and then just compare where they are. And very obviously from there, you'll see the blue line at the top is the NASDAQ 100. So if you're in a pie chart, you don't own the QQQ, you don't own the NASDAQ 100. The odds are you either own VTI, which is the broad market, or you own the S&P 500 and then a separate small cap fund. And it's showing what the returns of those various indexes were for the year. And then I walk through, if you were in a pie chart, what the returns would be if you were in an international broad market, emerging markets, gold, which has actually been one of the few outperforming sectors that you should see in a pie chart. And a lot of managers don't even include gold in there, and bonds, and showing what the returns were, and then starting to show what you would have given up by not participating in any of the leaders. The reason that QQQ is way up like that and outperforming is because of the components of it have done just an incredible job. They've got new products, new services, something that improves the way you live life or the way you work, or your productivity. And there has just been a surge of money into them. And you're not taking advantage of any of that if you're stuck with the averages. If you're in the averages, you're going to get average returns. And along with those average returns, you're going to get what we've seen over the last 20 years is 250+% drawdowns and a 34% one in 4 weeks, which we just had in the first quarter of this year. Now you'll immediately say, but Don, it all came back. It came back all the time. What's your opportunity cost and how low? You have to get 100% return if you sit through a 50% drawdown. Suppose you could stop your drawdown at about 15% and then participate from that higher level when the market rights itself. We talk all the time about what the signs are for a healthy market versus an unhealthy market. Unhealthy markets first start with the break of the 21-day exponential moving average, then the 50-day, and then finally the 200-day. The 200-day is the line in the sand. You need to be out if the market, or hedged if the market breaks the 200-day moving average, because that's when the difficulty really kicks in.
Well, not only that, I would like to make one point. So
Please.
people, when Don's talked about that 50% drawdown or even 35% drawdown or 30, people get, first of all, Tim always says, what if you need the money? What if you need the money then? Because if you're just doing that pie chart, you're just taking whatever the market does randomly on the market's time frame. You've given up control of your time frame and turned it over to the market. Okay. Secondly, a lot of people forget their risk tolerance because that goes out the window. That's nonsense. They will get so scared, they will go, oh my God, I just lost half my money or a third of my money. I'm out. I can't take the pain anymore. And then they don't get back in. So a lot of those people will never see that recovery, Don, that you talked about. The market always comes back. Some people won't. And there are times that the market doesn't come back for 10 or 15 years. It has this time, but in 1968, once you had the 70s where you went through the correction, the market didn't start rallying till the mid 80s. I mean, you were down for 15 years. In 1929, obviously that was the longest one. Those were decades. But there are times where it takes 3-4 years to recover, not 2 months. So I wanted to add on
Or
to those
a
things.
decade. The 2000 to 2010 was the lost decade.
Yeah.
Zero return.
Yeah.
The
So
only,
so you'll
the
be
only
able to
people who
make
get
money,
rich though,
or at least not lose money during downturns. You'll be able to maximize, but also it's just a much smoother ride. It doesn't turn you into a
the
neurotic
dirty
mess.
secret is, Danny, the people that that are proponents of indexing and don't want you in individual stocks, they're the only people that get rich.
Oh
Nobody
yeah,
gets
no,
rich
it's about
indexing.
their annuity stream, not yours. You
Yeah.
think it's about your annuity stream, your retirement. It's about theirs.
Don, real quick, run through the numbers from the March drawdown as an example for folks. What I want you to do, folks, is listen to this, because if you go down like the market did, you're starting from a further point behind. A lot of you don't understand that unless we actually put real dollars behind it. And so I want you to imagine 20 or 30 years of what we're doing and showing you every night, and what someone who might purport to be is the best way to do it, which is indexing, or diversification, which is awful. Go ahead, Don. I'm sorry.
The drawdown on the S&P 500 was 34% over 4 weeks. Our portfolios year to date never reached double digits down year to date, because not that we're geniuses, we have a set of rules and we follow them.
Speak for yourself, Don. I'm pretty damn smart.
You are, Dan, and humble. We have rules and we follow them, and the key rule among that is when you break the 200-day moving average, get the heck out of the way. Yeah. I did a webinar on this at the beginning of the year saying stay clear of the bear. We had a bear market. The fourth quarter of 2018, we had a bear market. Then we had 30% returns in 2019. We came into 2020 as a firm getting the message out there: do not give back the gains that you made in 2019. And I did a study of the last 11 bear markets, certainly not knowing that we were going to have a bear market that we had with the COVID crisis. But it laid out, I mean, the averages of that drawdown were just about in line with the averages that we saw in the previous 11 bear markets. From the top until the sell, there's a 12% drawdown. Normally that means the S&P 500 peaks about 12% above the 200-day moving average, and then by the time it starts selling off, and these sell-offs are usually very harsh, like a couple of weeks until you can get down there. This one was quicker. It was less than a week until we lost 12%. And then after that, the average one loses an additional 23% once you break there. That 23% is the gravy that you get to sit through while the market makes its bottom. They don't all go down that far, but that's the average. Some of them go down 45%, which was the case in 2007 to 2009 with the financial crisis. But sitting through that in cash while everybody else is losing their minds, the peace of mind of that is priceless. And then knowing that you've got rules to get back in our case, we got we dipped a couple toes and then we got a big buy signal on April 6th of this year. And we went with it because it didn't fail. If it would have failed, we've had sell rules to get back out of there. But you're starting from, if you peaked at $100,000 and your drawdown is 12%, you're at $88,000. If you had a 34% drawdown, you're at $66,000. So starting from 88K on your way back up is a whole hell of a lot easier than starting at 66.
So do that now, stock nerds, over the course of your investing career. I'm telling you, not everything is sky. People want to, in this day and age especially, they want to be very hyperbolic. They want to be very sky is falling. Look, I don't know how bearish I want to be right now, but I'm just following my rules, so I don't have to come out here and convince you of anything. I'm not trying to sell you anything. We're not. We're just, hey, this is what we're doing. This is why we're doing it. We understand that it's a market and anything can happen, and we could be wrong. And to the crowd that says, I mean, Don, what's the S&P's up now after today's pullback?
Year to date, what is it up?
Yeah.
It's going to be around 4, probably 5.
It's right at 3,390, 3,400. You're up 5%.
Yeah. So you've given back 3%, 4% in the last couple of days. You're at the mercy of this, and you're whether it stops now. If it stops here and it starts moving back, that's fantastic. But if you're fully invested in your diversified portfolio of index funds or ETFs, whatever, what money can you put to work? If you never sell, Don, what money can you put to work?
And that's one of the biggest hypocritical things that buy and hold people always say. Oh, we're buying this pullback. With what? You're always fully invested.
The only people who get rich are the people that tell you that you should be indexing. That's it. That's the only people. No indexer. You might be able to.
I'm not 100% against indexing, because we use some index ETFs at the appropriate time in our process. I'm against indexing with no stop.
It's the buy and hold indexers it's buy and hold indexers with no stops. Like, look, you can get ahead.
That's trend following versus buy and hold pie chart.
Yeah, the buy and hold indexers and the pie chart is They don't like the words active management. Listen, our fees are so, I wish Danny would raise our fees, but they're so incredibly low. And then measured, they're even lower, measured against the opportunity that it's costing you. But you don't know that. And when Don started, you should see the light bulb go off for stock nerds and market lovers and their friends and family. When Don started putting, it was a great revelation by Don. We need to start putting real dollars behind what these drawdowns represent. And when we started doing that, that's when the light bulb went off of how much the indexers, the buy and holders are costing you. And people make the mistake that the indexers want to convince you that that when you buy a stock, it's too risky. Because why are you buying a stock for life? You're not married to it. If it doesn't work, you're going to sell it. But nobody, I'm telling you, we're the rarity in this world. Not only do we show you what we're doing, we're going to give you the stocks too. We're going to give you screens. And we show you how it's done. We give you the rules for entry and exit. There's nobody else doing this. Danny, who are you texting? That's a segment of this show.
I'm not texting anybody. I'm not texting anybody.
Are you sure? Because I can look at my phone too. Are you texting me? Trying to send me secret signals?
No, I was actually looking at a stock quote.
Hey, let's talk about something else very quickly too.
Yeah.
Thinking that you're diversified because your pie chart, well, you guys only say it was the S&P 500 that was down 34%. I'm diversified. Okay, your international index was down more than 34% versus the S&P 500. There was no safety because you had part of your money in international funds. Emerging markets, same situations. Those were down 33% at the bottom. Hiding out in all the correlations become the same when there's a deep sell-off and a crisis. So being in emerging markets and in foreign funds is you're not safer there just because the S&P 500 went down 34%.
Folks, what Don is saying is diversification doesn't help during a major sell-off. They all grow together. They all go down together. It's a big lie. Wall Street knows it's a lie. You want enough diversification on the way up so that one individual position doesn't kill you. But on the way down, you only want one or two asset classes, whichever the most are defensive, whether that be treasury bonds, gold, or cash. There's only a couple places you want to be.
And can we just discredit this too? I want to look how many people bought utilities in 2020 because of the pandemic, thinking that's where, Don, what are Utes doing for the year? Utilities have been awful. And yet you're getting paid to wait. And the dividend component to some of these is not, we covered this. There's a show we did last week. I'll show you where it's at. That is probably the best show we've ever done. This one's pretty good. But
yeah, utilities were down 30% at the peak, not 34%. So kudos to utilities for only being down 30%.
Yeah. Just ridiculous.
And year to date, utilities are down 8%, while the S&P is up 5.5%.
And two things about being down. You're hiding out, stock nerds, in utilities, and there's nowhere to hide there. Secondly, what Don didn't say, and Don, the portfolio that you reviewed, what was the result for this year?
Down over 9%.
Think about that.
That was while the S&P, that was at the end of August, so the S&P was up about 8% at that point.
It's a big swing. And like I said, stock nerds and market lovers, I don't think it's you. I think though that there's people in your loved ones' lives that they trust, and these are hard discussions to have with people. Like, not, hey, mom and dad, let me see that portfolio. I mean, but you do have to ask. I mean, you've got a long life to live, and if you're 60, and there's a really good chance you can live 30, 35, 40 more years, God willing. This kind of nonsense that's happening that we see every day is really going to hurt. And you don't know it didn't work until it's too late. And I should have asked questions sooner is usually what is said. And so or you don't know when you need it. You don't know when you need the money. The market doesn't care when you need the money. That's the other thing too. That and then they'll tell you, well, you shouldn't be in equities if you're that concerned. You're not making any money with bonds. So our federal government has forced you into riskier assets. You need a different strategy than the one used in 1987 and 1997. It's so crucial.
Not
Let's
only
do this,
that, in
Don.
this interest rate
Yeah,
environment, bonds are as risky as stocks. When interest rates
that's
start to
true.
rise, stock bonds will sell off as much or more than tech stocks.
If you can't find Don's class on Stay Clear of the Bear that he did 7 months ago, and then 8 months ago, there are eight rules for managing your portfolio. What I want you to do is just call us at 855. We'll send it to you. Just call. Where's the website?
Hey, listen, email me, and I've got actually a chronological order. Don did that in late January. Stay Clear of the Bear, and then you actually had the sell-off a month later. And Don even says it. I don't know whether it's 2 weeks, 2 months, or 2 years. I don't know when it's going to happen, but you need to be ready. And
Yeah.
2 months later, he does that bear market recovery plan when it was at the bottoming process, and then halfway up when the market had recovered. So you literally see the whole market cycle within
Yep.
3 months. And I've got all those links in that I can send in an
Yeah.
email so that you can watch those together. So you get a really good flavor of top, bottom, and then kind of recovery.
You'll get all these classes, and Danny will send them to you. Just call them or email them, and Danny will make sure you get taken care of. All right, Don, let's do this. Someone asked me about screening for, like, how do you know what groups of stocks are being rotated into by the institutional investors? Let me do that first while it's top of mind. I'm on FinViz. Look, this is really hard to do on FinViz because you see all the sectors here, and you can see them. There's a way that you can look at these on charts, and so here's the charts. Look, this is the hard way to do it. You'd have to. Oh, these are for all the stocks. What you want to do is go to groups. I'm sorry, groups, and then you don't want to do one day performance. You need to take this out over. You need to take this out for, like, say, quarter or even longer, and then you can do the charts. And then I won't waste your time with it here, but you can start putting them into Excel spreadsheets and tracking the rotation. That's the hard way to do it. The easiest way to do it is to look at Investors Business Daily. That requires a subscription now, but you still have to understand of the 34 basic subgroups, 34 basic sectors. Inside of those sectors live the 197 subgroups. And then what IBD does so eloquently, which I love, is they don't rank them by their thought process. It's pure buying power. So the more buying that's coming into a sector or a subgroup, you can see that percolating up, and you can just tell. And so the common question I would get is, well, if it's number one, does that mean that you've already missed the move? No, not necessarily. What you want to be able to do is scan from like 50 on up, and you can see and measure it based on like 6 weeks, 3 weeks, current week, and you can then see the flow. And I do this every week, and that's the question. If you have any questions on that, I want you to. That one is a tough email. Call Danny. Danny knows how it's done. 855-732-5932, and he'll walk you through it. Okay, he'll talk you through. If you don't understand anything I just said there, he'll talk you through it. Let's go back to the group screen. Let's go back to the screener. Don, do you want the worst screen do you want the screen you hate first?
I'll get up and go to the bathroom if you are going to bring that one up. Yeah, so that would be a good time.
Here we go. Stocks under $10, Don, which I don't have this set right because this is the problem. We did this last week too, and I think what's the mistake? Oh, over $1.
Yeah, that's it. The list is so bad that it keeps trying to change it so that you don't run.
It's adding these stocks here. So it's my stocks under $10. I need it under $10. Here we go. We talked about this last week. Wow, look at this. Remember we talked about Airman, AMRN last week, and look at that dip on that chart, Don. Yikes. Yikes, yikes. Oh, that's not too bad. It's a good looking chart, Don.
Oh, buy that immediately.
Let's look at MEAT. Let's MEAT. Danny, don't get excited. It's MEET, not MEAT. There's meat. So look, pause your video, take a screenshot of all this if you want to build it. Then this is a free tool. I do all this free for you so you have something. Let's do div, oh, that's not it. Let's do div grow 2000. So the div grow 2000 cranks out stocks that are pricing out with yields above 2%. And you can see the same names keep it. Look at that store. That's an interesting. That one keeps STOR. So it's not a bad looking chart there, Bob. Store. What's Smucker's doing? SJ, not Snickers. What's Smucker's doing? That's holding the gap down. SJM. It's not a bad looking chart.
Not bad at all.
No. So you can go through these screens and find. Oh, Don, look. It's Richard's Sporting Goods. Who knew? Huh.
Who knew?
Let's see, Dix. Danny, you can't plan the jokes. They just come to you some days. You like Dix, Danny?
I do not. I do not like their sporting store.
I didn't know. I tried to do it with a straight face.
Put you back in the cage, Tim.
Hey, have you ever seen the Kanye West South Park episode where they play
let's not take a left
joke
turn.
the
Let's
joke
just keep
on him?
moving.
I had the straight face and then you broke it down. I couldn't. Why don't they change the name of the store, for the love of God? I mean, it's a great question, right? Nothing, Danny? Don't want to
I
analyze
already
this
said
one?
I didn't like it. I don't like it. I like Cabela's.
Okay. Oh, they don't. Cabela's merged with, who they merged with?
Bass Pro Shop.
Yes, they do. That's not a publicly traded company. I think Extra looks good too, EXR. We'll take a look at EXR. EXR. Tell you what, DivGrow 2000, Don, has got some stocks here, man. That's a good screen, folks, to work with. Okay, let's do growth here. We'll do this one. And then we'll do 21 over 21. So I'm going to do grow screen with 300,000. Look at this, Don. 2 stocks, Amazon and EPAM. We'll take a look at EPAM and we'll take a look at Amazon if anyone isn't familiar with where Amazon's headed right now. Not down 5%, Don. Found support here at the 50-day moving average, and now it's back above the 34, trying for the 34. EPAM. It's a little bit better of a chart. Taking a look there. So 2 stocks on there, Don. Give me some 21 over 21 names. And hold on, before we do that, Danny, let's do this. I think I've gotten to enough of the list that I can then I can cover anything I missed next week. Is there anything, Danny, you wanted to cover real quick before I want you to do?
No, I think you're good. I think we're good.
Yeah, do the normal outro.
All right,
And
folks,
then
listen, if you liked what you heard, please tell a friend, tell a neighbor, tell them to go to revereasset.com and they can sign up where it says subscribe. They can sign up for our daily market insights. Tim and Don rotate that. It's a short 10-minute market video with investment research ideas and what we're doing actually in the shop. There's also a webinar sign-up page where Don does a lunch and learn about once a month as time permits, and you can sign up, and it's an hour long at noon Eastern time on a Wednesday. And if you can't do it, even if you can't make it, register, because he'll send you the recorded link after it is all completed. You can also email any of us at Dan at Revere Asset, Tim at Revere Asset, or Don at revereasset.com. You can follow us on Twitter at @1 Danny Stewart, at TJ Riazor, or at D Vandenborg. And you can always call us old school at 855 Real Wealth.
All right, Don, let's do some 21 over 21 list. And then I've got one last nugget for our stock nerds and market lovers. Go ahead.
Yeah, I'm wondering if I'm even going to be able to come up with 21 by the end of the day today because of the severe sell-off over the last couple of weeks. 2 that as of yesterday I knew would have been coming off were Sedge, SEDG.
Okay.
You can see the clear break. You get your pink line on there is the 21, right? And then
That's
the blue
correct.
line is the 34, and then it bounced at the 50. Uh, this is actually a very fine entry point, and this is what you're seeing with a bunch of leaders today, or what were former leaders. Usually the first two trips down to the 50-day moving average after a breakout out of a sound base are buying opportunities. Now, if you break below today's lows next week on a lot of these stocks, then the market is in for a much more severe correction than if we hold at this point. Some of the leaders are breaking down below their 50-day moving average, but a lot are bouncing right there where they needed to. The issue is that they were so extended above the 50-day that you're seeing 15 to 20% pullbacks over 2 to 3 days in these stocks. And Sedge is fits that bill. It went from 225 to 180. Another one that's going to come off is Fastly, FSLY, one that I mentioned I sold out of yesterday. Clear break of the 50-day moving average, and one that looks like it's going to be added, NTRA.
There you go.
So you see the undercut but reclaim of the 21 at this point in NTRA. A little shakeout there.
Like that. Is that all? That's a good preview.
Yeah.
I think we've whetted the appetites enough. Let me show you something, stock nerds, and then we will let you go to do your own research. We are asked about back testing all of the time about our portfolios, and like, we're not doing a static pie chart. By the way, we don't give out brochures either. Brochures are the biggest scam in the industry. When you ask to say, can you send me your brochures? People only put what they want you to see in their brochures. They don't tell you about their massive losses. They don't tell you about their mutual funds with 2% fees. They don't tell you the nefarious stuff they're doing. So when you ask to see someone's brochure, what you're really saying underneath is, just tell me what I want to hear. I don't know what to do, but I trust you're going to do it for me. Am I right, Danny?
That's pretty accurate. Well
Yeah.
put.
Brochures are the biggest waste of paper and your mental datum sets in the history of mankind. And so I encourage you to not ask for brochures. What I want you to do, and what Danny is always imploring stock nerds and market lovers, your friends and family, to do, ask the people in your life that are managing your savings, when would they sell? What would trigger them to buy? How are they managing? If you get, well, we're doing nothing, you know what? It's not the end of the quarter. I feel bad because a lot of you only get to review your portfolios with Set Advisor or Money Hustler once a quarter or twice a year. We're doing it every day. Call them this weekend and say, I want to do a portfolio review. It shouldn't be some astronomical stretch. It should be something that they can just talk about. Right, let's just do it right now over the phone. These are the positions we hold. This is why we're holding them. This is what causes me to get defensive. This is what causes me to want to buy a little bit more of XYZ, whatever it is. They should be able to talk off the cuff. If they can't, that's like your first warning sign. If they need to prepare for 6 days to just talk to you about what's in your portfolio, you probably know the answer. But I want to show you how you can back test us. A lot of people don't realize what I'm about to show you, and I want to make sure that I cover this with you. So when you go to revereasset.com, I want you to go to Daily Market Insight. So we never take down a video. We sure as hell don't edit them. So at the bottom of the page, you'll notice 161, page 1, page 2, page 165. You can go back. Let's see here. We'll just go. You can go back. Just click next. You can go back until you get to February of this year. You can click all the way back to February of this year. And then what I want you to do, you can pick any time frame you want. I would say you do it the third to last week of February, where you start seeing things like, if this level breaks, this is what we're doing and how we're going to operate, how we're going to sell. And you'll see how we operated at the cusp of the big sell-off. And then you'll see how Don and I and Danny and I operated as the pandemic came full on, and then what we were doing as we came through it. A lot of you want us to do back testing because you want the confirmation bias, which is you want us to assuage your fears. We don't sell anything here, stock nerds. I'm not here to assuage your fears. I'm here to present fact and then make Danny uncomfortable and make Don smile. Like Don, if was drinking soda, would have came out of his nose on that last joke, which, by the way, would have been really great, Don. I'm really bummed that you weren't drinking a soda. So back
St.
test
Croix,
us. LaCroix. Back test us.
lemon cello or whatever.
Is it? I am clearly pronouncing it wrong. It's not. I make it sound like a lemon flavored violin, like a
I
stringed
thought it was,
instrument.
it's really beef tongue. That's just the,
It's just the code name for beef tongue is limoncello. The way to back test us is to see how we were operating in real time. That's the best way to look at us. And you can download these videos. Here's what I really want you to do. What's going to happen? I always tell people, you can download all of our videos. You can keep them forever and a day. What some people like to do is show them to their advisor and go, why aren't you doing this? And then the advisor talks down about how dangerous this is. And then show that advisor all of the ways we operated in the markets, because they don't know how. They don't know how to do what we're doing. And that's not, they could if they had some talent, but it takes, I'm telling you, there's a lot of psychology that happens in times like this, in this market. And so, yeah, like, do I want to have, I sold some stocks, but do I wish I had Tesla? Kind of, but look, if the NQs can't, look, when we talked, the NQs were off the 34. They're now back down to the 34. It's not really bullish. And so I think caution is warranted. If you're going into the weekend 100% invested in your diversified portfolio, you should be, if you're not already alarmed, you should be concerned in making some phone calls. Danny, I'll give you the last word.
We'll talk to you next week on Your Money.